Let's move on to the bond market, where the Nigerian Bulk Electricity Trading Company, or MBET, has taken a major step towards the easing of long-standing debt challenges in the country's power sector. Today, the agency, the debt office, and other parties successfully signed off on the first tranche of the 4 trillion naira power sector multi-instrument insurance program. Our Rise business producer, Lillian Jingi Aguda, was at the signing event and reports.
This signing ceremony is more than just paperwork. For Nigeria's power sector, it marks a deliberate move to confront legacy debts that have weighed on the progress of the industry for many years. The Bulk Electricity Trading Company says the Series 1 of its power sector bond offer results in more than 501 billion naira subscription. The special bond is split into 2 tranches of 300 billion naira size and another 201 billion naira. Both papers carried a 7-year tenor with a yield of 17.5%.
Lending to that sector.
MBET says the goal is straightforward: fix the cash flow problems that have slowed the growth and investment in the sector. From power generation companies to distributors, delayed payments and mounting obligations have strained operations across the value chain. Officials believe this bond will help clear some of those debts and restore confidence.
As we sign this instrument, we are not merely raising capital. We are unlocking the next chapter of stability, liquidity, and investment into the power sector. One that strengthens market disciplines while enabling growth across generation and the other segments of the electricity value chain.
Stakeholders at the ceremony say clearing legacy debts could also change how investors view the sector, opening the door to fresh funding and expansion.
This transaction sends a clear and reassuring signal to the power sector and to the wider economy that the federal government is committed to honoring its obligations. So as a DMO, I know how important that is, but this is yet another sign that the federal government is committed to honoring its obligations, that we are prepared to deploy innovative financial solutions to resolve systemic challenges such as the one we've had over these years on the power sector, and that we remain focused on restoring liquidity, confidence, and discipline across the electricity market. By settling legacy debts in a structured manner, in the manner of the power sector bonds, we're enabling generation companies to stabilize operations, improve maintenance, and attract new investments, all of which are critical to improving power supply nationwide. Distinguished guests, let me emphasize that this program is anchored on strong governance, transparency, and fiscal prudence. The Ministry of Finance, working closely with MBET and other stakeholders, remains committed to ensuring that this initiative supports the power sector reform while safeguarding macroeconomic stability.
The presidency says the impact is already being felt.
This program was not conceived as a bailout. It is a balance sheet reset. Its purpose is very straightforward: to clear verified legacy obligations, restore liquidity, and reestablish the conditions under which operators can plan, operate, and invest on commercial terms. Over the past several months, we have worked closely with the Ministry of Finance, MBET, Chairman NERC, the power generation companies, to reconcile claims and negotiate settlements based on strictly verified obligations. Today's signing ceremony marks the outcome of that process. 14 generation companies have executed full and final settlement agreements. With a total negotiated value of about 827 billion. These agreements reflect discipline, compromise, and a shared commitment to closing the chapter on legacy matters. The significance of this milestone lies not only in clearing the past, but what it unlocks going forward.
The issuing houses to the offer say investor appetite was strong, pointing to its structure and pricing.
Offer closed on the 8th of January 2026. Clearing price was 17.5%. The cash portion was fully subscribed, 300 billion. In terms of participation levels, we had 50% of the offer was subscribed by pension fund administrators, another 41% by banks, 5% from asset managers, and the balance from other investors. So these are feedback we've got into the market, which we must take into consideration to ensure that the Series 2, which should start towards the end of this quarter, early next quarter. So by March, April is when we envisage we should be coming to the market with the Series 2.
With this bond issuance, the Nigerian government and industry players are hopeful that fixing today's financing gaps will translate into a more stable and reliable electricity supply for Africa's most populous economy. Lillian Jijingi Aguda, Arise News.